Bitcoin is climbing higher, but the real charts of economy, liquidity and more reveal its true future. Tune in to find out the secrets behind the charts. Bitcoin will pump and then dump again. Why this will be the case and what is the status with altcoins right now? Trading tips for everyone with Fluffy and Alex.
The opinions and views expressed on this channel are strictly personal and do not represent financial advice. Always do your own research before making any decisions.
Hey everyone, let's dive in. It's April 30th, 2026, and we're looking at Bitcoin together with the bigger economic charts, because the real story of where BTC is heading isn't just on its own price chart. It's connected to what's happening in the US economy, liquidity, and risk appetite. Here's the big picture I'm seeing right now. Bitcoin will probably pump hard in the short term, but then it's likely to pull back again. Let me show you exactly why, using both technical analysis and these macro charts. At the end, we'll also check where the altcoins stand. First, look at the tech sector. The IGV ETF, which tracks technology stocks in the US, appears to be building a solid bottom. On the daily chart, we're seeing bullish divergence on the RSI, cumulative volume delta, and on balance volume. What does that actually mean in simple terms? The price was making lower lows, but these momentum and volume indicators are making higher lows. That shows hidden strength. We're seeing something similar on the weekly chart too. This suggests the tech stocks are putting in a bottom. And why should you care? Because Bitcoin usually moves in step with US tech stocks. When tech is doing well, BTC tends to follow. You can see it clearly on the overlay charts. The orange line, Bitcoin, and the blue line, tech stocks, have danced together for years. Next, high-yield corporate bonds, the HYG, are similar. For these risky bonds to rise, you need plenty of liquidity in the system and an economy that's not falling apart. Right now, they've bounced higher, and that bounce actually marked a local bottom for Bitcoin. Again, you see the correlation. When these bonds move, Bitcoin often follows. Same story with credit spreads, the difference between high-yield bonds and safer government bonds. If we flip the chart, it lines up with Bitcoin's moves. And right now, spreads are tightening, which means more liquidity and willingness to take risk. That's generally good for Bitcoin and other risky assets. Now let's look at some key economic signals that tell us about liquidity and the health of the US economy. Banks are easing their lending standards. The percentage of banks tightening criteria for commercial, construction, and industrial loans is around 8 to 9% and has been trending downwards since 2023. In plain English, fewer banks are being super strict about giving out loans. When this number falls, it usually means more money is flowing through the system. And historically, when this chart trends down, we don't see recessions, and Bitcoin, plus other risky assets, tends to do well. You can see the inverse relationship clearly on the chart. The Chicago Fed National Financial Conditions Index is also showing that the economy isn't in a tight spot. Conditions are okay, not perfect, but not as bad as some headlines make it sound. Unemployment hasn't started accelerating yet. If this keeps trending down, in a good way, it supports Bitcoin. The most important one? The indicator that shows where the business cycle is headed. The ISM PMI, the key gauge of the manufacturing and services sectors in the US. When it's above 50 and rising, it means the economy is expanding and accelerating. Bitcoin and risky assets love that environment because it supports liquidity and confidence. Right now, we're sitting comfortably above 50. That's positive. In the past, whenever this index was above 50 and climbing, Bitcoin often climbed with it. You see a similar bullish signal in copper prices. Copper is the metal of electrification, construction, and growth. When the economy is expanding and liquidity is plentiful, copper tends to rise. It's doing exactly that right now. Even the copper-to-gold ratio, a classic gauge of global economic health, is looking constructive. If it breaks above certain levels, it would confirm we're building a bottom in risk appetite. And historically, when this ratio rises, Bitcoin has often risen too. So why am I saying Bitcoin will go up, and then come back down again? Even though we have these positive signals, there's a problem under the surface. Quick reminder. Stay safe online and protect your crypto. I use Proton VPN to protect my privacy. You can find the link in the description if you want to check it out. This way you support the channel. Global liquidity is the key fuel for a real Bitcoin bull market. Right now, the year-over-year change in global liquidity, That green line is trending downward. The rate of increase is slowing. Without accelerating global liquidity, Bitcoin can have a nice bounce or short-term rally, but it struggles to sustain a full-blown bull run. It runs out of gas, corrects, and pulls back. I don't think it will crash below $60,000. It might just make a higher low and then correct nicely, but a decent pullback is likely. This is why I see 2026 more as a bottom-building year rather than the start of a massive new bull market. We need that liquidity line to turn back up and accelerate for the real fireworks. On the technical side for Bitcoin itself, if April closes strong, ideally above $79,000, we'd get a very bullish monthly candle pattern, a bullish morning star or bullish fractal. That would increase the odds of continuing higher. Right now, BTC is holding above $76,000, has broken structure to the upside on daily and weekly timeframes, and there are targets around $84,000 where we have fair value gaps, break of structure and mitigation block. As for altcoins, looking at the others versus Bitcoin chart, altcoins outside the top 10, excluding BTC, ETH, XRP, SOL, etc., they're still stuck and haven't been able to break above the middle of their trading range against Bitcoin. Until that flips and turns into support, I'm not expecting a big or small altcoin season. I'm staying cautious. The only alts doing well are the strong ones with real utility, revenue, or strong narratives, like Hyperliquid. Focus your attention there if you're trading alts, the ones that actually solve problems and generate income for the protocol. Most alts? Not yet. Wait for that others versus BTC chart to break higher and hold. If you want more depth, check out my previous video from Thursday where I broke down institutional money flows into Bitcoin and stocks, super important for understanding if we're really building a bottom. Also watch the one where I laid out my full plan and outlook for Bitcoin through the end of 2026. Drop your thoughts in the comments. What do you think will happen with Bitcoin and alts in 2026? Are you bullish, cautious, or somewhere in between? Follow us on Twitter for more updates. Thanks so much for watching. See you next time, take care.